right, welcome back to EXP Realty, Minnesota. My name is Justin Campbell, and today we are going to be taking a look at the foreclosure process specifically in Minnesota. Now, this process may be similar in other states, but generally speaking, this is going to be Minnesota specific. Now, for most people, foreclosure is a process that we typically try to avoid. But if you're aware, maybe even just in the media, even movie stars like Kevin Spacey go through the foreclosure process. So if you're going through foreclosure yourself, don't be afraid. This is kind of a common occurrence. And it's really nothing to be ashamed of. We all go through different circumstances in our lives, and it makes making our payments on time difficult. For myself, I went through foreclosure myself in 2008, and it was horrible. And I was even a real estate agent at the time. So I had the knowledge and information, and I understood the circumstances I was in, and I didn't have a lot of power. And I think that that is probably the hardest part, is just really losing the power, and then also just having our homes are such an important part of our lives. To have that portion of our life destabilized is incredibly stressful. So let's jump into the video. First off, I just want to add in that this is going to be more of a generalized approach to foreclosure. In future videos, I'll go a little bit more in depth on the process. But today, I just kind of want to cover a general overview. So if you're in foreclosure yourself, or maybe you're looking for information about the process, or maybe you're buying, this will be a really great video to kind of kick it off. Look for future videos where I'll go a little bit deeper in the process. So what happens in foreclosure? Now, obviously, the big thing is you have to be behind in your payments, but there's a couple of different ways that a foreclosure could be started. It may not just be directly related to your mortgage. Some people who are going to have homes owned in a homeowners association or HOA, they can also be foreclosed. And that could be from maybe you broke the HOA rules, or you're behind in your payments, and the HOA can actually initiate foreclosure and purchase your home or sell your home at auction. Some other ways, obviously, could be your mortgage. There could be some tax liens. There could be a judgment that came through, and they're forcing a sale out of your home. Now, generally speaking, on a judgment type deal, if you are being sued and this is your primary residence, be sure to homestead the property, because that is going to offer you protections that you wouldn't get if it was like an investment property, or for some reason it wasn't homesteaded. That homestead status will protect you in most cases from outside entities, but not in places where you are on a loan or part of an HOA. You're not going to be able to have those protections in that case. Now, let's focus in specifically on the mortgage side. When you sign a mortgage note, you sign a repayment agreement with the bank. And what that means is that if you don't make those payments for some reason, you're basically giving the bank permission to use the foreclosure process to reacquire that asset back from you. Now, in Minnesota, there isn't a hard line as far as when they can start initiate the foreclosure process. Typically, it's going to be 60 to 120 days late. If you're only 30 days late, chances are they're not going to kick off the foreclosure process. And if you're only 30 days late at this point, make sure you reach out to the bank. They do not want to foreclose. It is not a good way for them to get their money back. They'd rather get you back online and make a payment. And so they got a lot of different options for you. It could be they'll put those funds at the backside of your mortgage, or maybe forgive it. It just really depends on what the situation is. So be sure that you have open communication with your bank if you're early on in that process. Now, let's say you're getting out 60, 90, or 120 days late, and you haven't made contact with your bank or tried to work out a payment agreement. They are going to hire a law firm, and they're going to do something called foreclosure by by advertisement. And what that means is they're going to run an ad in your local newspaper. There's not a lot of these local newspapers. I know we have like the Sun or the White Bear Press or some smaller papers where they still run this. Most of it is online. But what happens is they are going to run that foreclosure by advertisement. I believe it's going to be a total of 6 weeks. So after that 6 weeks period where they've put that notice out there publicly, and I think the main purpose of doing this is maybe you are at home, but you're not getting the letters or something. They're trying to put that out there and make it public so that you have the opportunity to respond to it. Now, during that process, you can still stop the foreclosure sale by reaching out to your bank and or trying to contact the law firm who is collecting on the debt. I'd recommend contacting the bank and seeing if you can work with them first. This is also a good place if you're in that early notice phase of foreclosure. You can also have a real estate agent or other financial professional or really anybody that you want communicate with the bank. There's some specific documentation that you can fill out, and that allows that third party to communicate with the bank on your behalf. So if obviously you're not in a coma if you're watching this video, but if you're in a situation where maybe it's too much stress or you're unavailable for some reason, you can have somebody, an advocate, let's say, come in and help navigate that process with you and communicate with the bank. I think it's very important that you take those steps early on because once you get to the sheriff sale date, your options are going to be seriously limited. Another thing that you can do leading up to that sheriff sale date is you can do a bankruptcy. Now, I'm not a bankruptcy attorney. I'm just a basic real estate agent. So if you're thinking about using bankruptcy, if you're in bankruptcy, best case scenario would be to talk to an attorney about that. They're going to be able to be the best resource. I can't even really go in to specifics, but I do know that in some cases, filing bankruptcy could stop or delay that sale date. Now, on the date of sale, the sheriff is going to be the one who is going to be doing the auction. There's going to be some people there who are going to be purchasing the property. It could be the bank. It could be a representative from the bank. It could be the lawyer. It could be you. Some people see these as a fun activity. I don't enjoy going. But somebody's going to purchase that property at auction. So what happens after the sale? Now, the first thing to know is that if you own the property, you continue to own that property for 6 months from the date of sale. There are going to be some ways that date could be adjusted. If you got an extension on the sheriff sale date and they push that sheriff sale day out and then it ends up going to auction, they can shorten that redemption period. Now, that could be a month, it could be 6 weeks, it could be whatever, I believe it's just going to be straight 4 weeks. So if you do get an extension on that, just know that could potentially limit your ability to redeem that property during the sale process. Now, let's say for those people who are already in the sheriff sale process and past sale, or somebody who's looking to purchase, there's a few very important things that you have to know. First off, the sheriff sale redemption amount and the redemption date. Okay? So what's important to know about that is your mortgage is gone. Whatever that note was there prior that was leaned against that property is gone. It's no longer in force and effect. And now the sheriff has created basically a new deed for the property. And on the redemption date, you're gone, right? And so the reason we call it a redemption period is because during that period or time, you have some options to try to redeem it. I will add there is one more. It could be a 1-year redemption period. And I believe if you are over 50% of equity in the property, or I believe if it's a USDA. If you're in a situation like this, you can throw a comment down below and ask me the specific question, and I'll double check on this information for you. So let's just assume we're back in that 6-month time period. During that time, the only thing you need to do to redeem that property is you need to bring a check to the sheriff for the sheriff sale amount plus attorney fees. Now, what those fees could be, usually in the range of $1,000 to $3,000 plus a percentage of the total cost. So it's $100,000. Just assume around $2,000 and 10% interest. And so if the Sherrif Sale certificate is for $200,000 and you're 3 months in, you could be looking at maybe $203,000 or $205,000, kind of on the high end, to redeem that property. And that means is if you sell that property, let's say this subject that we're using, the $200,000, let's say you sell that property for $300,000 and there's no other liens on the property. And let's just assume you sell it to a friend. So you don't have a lot of expenses. You don't have to hire a real estate agent. So you just got some very limited costs in there. So let's just assume on the sale you're netting $297,000. All you'd have to do is bring in a check for the Sherrif Sale amount, the attorney fees, and the interest, and that will release the deed. And this means you're able to keep all of those remaining funds. Now, in America currently, homeowners, around half of homeowners in America, have 50% equity or more. And so what that means is for most people who are in foreclosure, there is a margin where you could sell that property and get a net. I've had clients who thought that they were going to lose everything, that they were never going to own a home again, that they were going to get booted out, that the bank was going to send some person there and they're going to be thrown out on the street and they were going to be homeless. I was able to take those clients, do some repairs on the property, get it updated, get it on the market, sell it. And in some cases, I've had sellers net upwards of $50,000 plus after the Sherrif Sale date. So it's very important once that Sherrif Sale date hits, that clock is running. You got 180 days. And if we're in a fall market where we are today, where I'm shooting this video, we're having a little bit longer market times. Are out getting around 30 days, 60 days, 90 days. Do not wait. Set up an appointment immediately. Have a professional real estate agent who's familiar with the foreclosure process, i.e. me, come out, take a look at that property, and you may be able to get that home sold and get a check paid to you at closing. Now, one thing to also consider in there is if you do have some additional liens or mortgages on the property, those are still going to be in force and effect. If you have a judgment, you will not be able to sell that property without paying off that judgment. But here's the positive part of that. If you do have some judgments, let's say on this subject property we're talking about that's worth it sells for $300,000 and you have to redeem at $205,000, and maybe you got a judgment from Capital One for $8,000 and you got a tax lien for $5,000. Guess what? At closing, the title company is going to pay off all those liens and judgments for you. And so that means once you've paid off the sheriff, you'll be able to pay off all of those loans, liens, and judgments against the property. And now you are going to be in a much better position financially. There is also the option on some of these judgments, and I've had great success doing this in the past, and that is to negotiate a reduced payoff on those judgments or liens on the property. So maybe that Capital One, you owed $15,000. They got a judgment against you. It's now attached to the property. You can't sell the property without paying off that judgment. Well, you give them a call and you say, hey, I'd like to work out a payment arrangement with you guys to pay off this debt over the next 12 months. What will you agree to reduce the total amount owed and accept it as payment in full if I enter into a payment arrangement with you today? And what they'll do is, chances are pretty strong, it is they want to collect that debt, and so they are going to accept a reduced payoff. And this also could happen through a lawyer or collection agency as well. Just understand when you call those collection agencies, you are in no obligation to provide them any additional information. You're calling to work out a payment arrangement with them and set up the terms. You do not have to go into any additional details. You don't need to tell them about the foreclosure. You don't need to tell them about Great Aunt Aetna or the funds or anything. You don't have to say anything. Tell them the specifics. I went through a hardship and this is what I want to do. And if they do a payoff agreement with you based on that payment schedule, they'll generate a reduced payoff letter. And we can actually use this letter to pay them off at closing. And this could be a huge positive for you because if maybe it was a higher amount, maybe they'll agree to a $7,500 payoff. And now when you go to close on that property, you'll be able to do that reduced payoff amount and net the rest of those funds back in your pocket. Now, keep in mind there are some financial implications for forgiveness of debt that need to be considered. Those are questions best given to an accountant leading up to closing or even prior, maybe to listing the property. Maybe you want to have that conversation with an accountant in advance to find out how a sheriff sale or post-sheriff sale is and payoff is going to impact you financially so that you can know this information in advance. I think the most important part of this video that I want to get through to people who are watching it today is that you are not in a hopeless situation. Most homes today that have been owned for more than 2 or 3 years are going to have equity. And if you've owned this home for 5 or possibly 10 or 15, 20 years, you could have a substantial amount of equity in this property. And so take the initiative, reach out to a really qualified real estate agent, i.e. me, set up an appointment. I will come out, do a walkthrough on the property, and get you into a position where you can understand what you can sell that property for. Keep in mind, not everybody who is going to be reaching out to you during this foreclosure process is going to have your best interests in mind. And that's why I recommend hiring a real estate agent or possibly a real estate attorney or attorney in general, because there are a lot of people who prey on individuals who are in a crappy situation. So keep that in mind. If somebody comes by and they make you a bunch of promises and they're telling you to sign something and they'll give you some money and they'll do this or they'll do that, be very, very cautious. Get a second opinion, do a little research on who the individual is to make sure that you are not being victimized. As a real estate agent, I'm held to a higher standard than the general public. I have a code of ethics. I'm regulated by a state agency, and that means that I have to provide you with disclosure and I have to advocate in your best interest. I can't come in and say, oh, we're going to do this, and then actually be advocating against you or working to try to get a positive outcome. So, obviously, as a real estate agent, I get paid to provide you a positive outcome. That's how I get my income. But I'm not going to, or other real estate agents should not be violating the code of ethics and take advantage of people in this situation. But that doesn't mean that you can just completely let your guard down. Definitely do your research and make sure that the person you're hiring to help you through this process has some experience, knowledge, and possibly even some referrals. I want to thank you for taking a few minutes for listening to this video. I hope it provided a little hope and information for you as you're going through a difficult process. If you're a buyer looking at this, and this information can be useful navigating that sheriff sale, post-sheriff sale process. Really after this sheriff sale, and once that property is redeemed, from there it goes into what's called REO or real estate owned, and these are going to be bank-owned properties, and there's a totally different process. So if you're looking to buy REO properties, that would be a separate circumstance, so definitely reach out if that is the case. If you got some benefit from this video, I would really appreciate you hitting that like button. Possibly consider subscribing to the channel if you're from Minnesota and you're going to be doing some sort of real estate transaction in the near future. Be sure to subscribe. We are here to provide you all the information you need for your next real estate transaction. My name is Justin Campbell. I'm a licensed real estate agent in Minnesota, and I look forward to helping you in your next